Oh, well. The infamous Hood actually got massively shorted yesterday. You guys don't know about this? Well, let me tell you about the story. So, Robinhood actually got shorted yesterday massively before earning happened. Seems like the street and the market think that the earnings are going to be super bad. It turned out that the earning is super bad. So if you go and look at the earning call today, which as a Robinhood investor, I actually listened to the earning call. Turned out that even though the net revenue increased from compared to second quarter of 2021 and compared to 2020, it falls short of expectations. And the fact that there are a lot of crypto related regulations and crypto related problems with Supreme Court and every SEC trying to basically categorize what cryptocurrencies and NFTs are, that makes Hood in a very awkward spot. Even though if we go and look at Hood's talking about, there are a lot of people are on the crypto wallet waitlist and blah blah blah. But the thing is, trading crypto actually composed of a huge amount of trading fees, and the fact that Hood actually doesn't charge commission and most crypto exchanges does, that gives Hood a clear disadvantage in terms of potential earnings. Therefore, there are a lot of hurdles that he has to sort of go through in the next few months and the next quarter to sort of pick up its track. But right now, I think it's actually a buying situation. Why? I think the fact that it gets massively shorted and today all of the shorts are getting realized by the end of the market end. You see, when the thing is, you can think about Robinhood as a blue chip stock, okay? Because when it reaches $80, every investor that pushed it to over $80 is assuming that they're going to do something with all of the asset under management, which they are technically speaking with Robinhood Gold and with more and more functions coming out with new acquisitions and stuff. Therefore, in terms of like a year-end sub projection, $45 is totally reachable, right? And we all know that during the third and the fourth quarter, the trading volume is going to decrease. Why? Because people are gonna, get seasonal work back. Winter is coming. People are getting more and more lazy. Oil is the oil and natural gas price is gonna increase, and people are shifting from trading equity to trading commodities. Even though a lot of equities are traded pegged upon commodities, but if you are traditional commodity traders, you probably can make more than actually trading on equity. But all of those kind of stuff, right? And also we have a lot of job reports and everything. Turned out that seems like people believe that COVID is going to go away by the end of October. So when COVID goes away, we expect to see the job market goes well. And when you see the job market goes well, less people is going to have free time to trade, correct? Because during 2020, it's literally a booming time where a bunch of people started trading, and you see the active user on Robinhood increase exponentially. So right now, it's sort of Robinhood entered a very slow growth period of time. Okay. So basically, if you think about it, right, the IPO price for a regular investor is $33 or probably like 34-ish, right? Cathie Wood's entry point is about $34, $35. And in aftermarket, it decreased to 36.22. I mean, what warranted this change? Of course, there are other reasons other than a bad earnings. Here it is. You have to read the fine prints within these documents. Update from the S1. So a lot of potential investors or existing investors who doesn't have the ability to invest in Robinhood before the pre-IPO price. The pre-IPO price is probably somewhere around $25, okay? And then they have tier 1 and tier 2 trench investors who gave Robinhood cash to solve their legal and solve their leverage problems early on during 2021. You remember the incidents of GME and AMC with all of the short squeezing going on or potential gamma squeezing going on. A lot of these stocks were converted upon IPO. That means at a certain point of time, all of these investors who are holding those tranche 1 convertible notes, they can start selling those shares, okay? And if you add up all these people who have those shares, It's about 100 million shares, okay? And if you look at the fine print, most of those agreements, including our founders and related parties, and non-employees and IPO investors, the lockup period was supposed to end tomorrow. Okay, the early lockup period. Somewhere around like 50%, they can sell 50% of their entire holdings. But due to the market condition, it's not met. So the founders and the most important people within this investor group, they cannot liquidate anymore. So we don't need to worry about potential share dump by those people. But we need to worry about the employees who have like a special lockup term during 2021, and their lockup period ends about October 27th. On this document, they didn't specify how many shares, how many exactly shares former employees, basically the former employees who already have options vested in Robinhood, they can sell their shares. And on here, they give you an estimate of 12.6 million shares that they can be sold by the beginning trading time of tomorrow. And what is interesting is this amount of, if you add up both amount of shares, we can do the math right now. Let's just say it's 98 plus 13 equals, where is it equals? $111. So there are 111 million shares that can be potentially sold. So if 111 million shares can be potentially sold, let's look at the outstanding shares. It has, well, how many outstanding shares do you have, my boy? So in order to do that, you just get 33 billion divided by 39. Oh my god. 33 billion divided by, this is billion, right? Divided by 39 equals to about 840 million. So about 1/8 that can be liquidated or potentially can be liquidated. So 1/8 equals to how much? Let's do it. It's about 12.5%. Okay. So the maximum downside risk we're enduring by investing, by basically becoming a late investor of Robinhood, is about 12.5% out of 39.58. So let's do the math, right? Calculation times 12 points, so it's 70. Let's just say 76%. $30. Wow. Wait a second. No, that's actually not right. 39 times. I said 12.5%, right? So 7.5. $34. So what most likely to be happening, but not gonna happen, is Robinhood is gonna drop to about $34.62 tomorrow. Okay, but that also presents you a very good buying point. Why? If none of the 111 million shares, or just like, let's just say, I don't know, like only 50% of those guys sold, then that means at $34.62, this stock is significantly undervalued. You see that? So right now we have a price range, actually. We have a price range from $34.62 to about $42. This is your price range. So your upside is up to 42, your downside is 34.62. All right. I think this is it for this video. I'm basically just explaining to you guys like how do I get the logic and everything. And I do think if tomorrow the price reaches about $35, I will start buying some. I mean, one of my dreams is to actually start holding some Robinhood, about 100 shares at least, and start selling cover calls, because it has a very volatile pattern of a of a sort of like a 1 or 2 day upside to a lot of days downside to another 1 or 2 day upside and to a lot of days downside, and then 1 or 2 day upside to a lot of time downside, which is a classic cover call security. You can actually sell cover call to make monthly revenue by that. And then by the end of the time where Robinhood actually reaches its full potential, which I think is around $45, the cost basis is probably half if we start doing selling like weekly cover calls. I do think this is a good investment, by the way. And this is it for this video. Hope you guys love it. This is it for this video. Smash a like button if you like this kind of content. And if you haven't subbed, go sub. All right. See you guys on the upside.